Hello and welcome. You're watching the Small and Mid Cap Show here on NDTV Profit. Thanks for tuning in. I'm Harsh Saita. With me is my Mawar Jani, and we have with us the management of IREDA. Now, this stock has been on a tear. In fact, the IPO price on this one was 32 rupees a share. It listed at 62 rupees, currently trading near the 300 rupee mark. So it's been a multi-bagger already over the last 12 months or so. And what we've seen over the last 6 months or last 1 month alone in terms of returns is 70%. Of course, we speak on the back of Q1 numbers, but just the kind of growth which is getting priced in will be interesting to understand. Welcome, Mr. Das, to NDTV Profit. Talk us through the loan growth. 25% is what you've guided for going forward. Does that remain because you're doing 6% sequential? Do you expect to grow faster than that, maybe a 30%? Is that possibly the goal, at least in the near term, given that your book size is also small?
Yeah, good morning. Thank you. Definitely, if you see, not only this quarter-on-quarter growth is happening. And why we are confident of further growth and improving the numbers with respect to sanction disbursement is our ministry has already announced that annual 50 gigawatt of bidding they will be targeting. If you see for a couple of years, it was in the range of 12 to 15. So 12 to 15 to jump to 50 gigawatt of bidding, that means the demand will be there. And once the bidding happens, definitely the tying up for financial support of debt financing will be there. Then the role of IREDA is there. So we are quite confident, not only will sustain the number, we will be improvising on that further.
Understood. Well, Mr. Das, I want to understand that for this particular, quarter, your margins have contracted a bit, and going forward, you're expecting that your balance sheet leverage will go up. So, where do you expect the margins to go by the end of FY25? Do you see them contracting further?
We are working in a sector which is new and emerging. So challenges are there. And then, as the name speaks, Indian Renewable Energy Development Agency, and being the loan extended arm of Ministry of New and Renewable Ministry, we play a developmental role also in addition to doing normal lending activity being in NBFC. So we have to be very cautious that how the sector is going to grow, and keeping in back of our mind that 500 gigawatt of installed capacity by 2030, whatever best manner we can support. At times, if you see so-called peers, exactly there is no peers for us in this industry, because there is no such a big company of, you said small, but we are the largest pure play green finance. And the future is green energy development, and green financing will be there. So our growth is almost guaranteed. That kind of demand is there. We need to only ensure how to augment the supply of equity and how to ensure best quality corporate governance. If you see our past track record, we have become a benchmark as far as reporting of fastest audited result as well as doing annual general meeting in the country, not only in this industry also. No banking, non-banking company is able to give in that speed in which we are giving.
Sure.
Also accuracy.
Right.
And you remember one thing, we got listed in November. And since then, our investors are quite enthusiastic. Therefore, our team is quite cautious. On 30th June itself, in the evening, we had reported our 30th June provisional results. So this kind of focus is there. It is not only to improvise loan book or improvise the NIM, but also to ensure sustainable qualitative assets and sustainable qualitative governance. And if you see last 4 years, our gross and net NPA is gradually reducing. It has been drastically reduced if you see from March 20, where 7.18 was net NPA, now it has gone down to 0.95. And we are confident in the time to come, not only will add out to our loan book, we'll also improvise our quality of assets further, reduce the NPA,
right,
and also sustain this best quality corporate governance, what we have done so far.
Understood. So I appreciate all of that, and I appreciate that your numbers were declared as soon as the quarter ended. I fully take your point. But with regard to growth, you're saying that likely just in terms of pure play renewable, you're the only one, of course, no questions there. But would you therefore grow at 30 instead of 25, which you've guided for at least for FY 25 and 26 in the near term?
We are confident. See, if I tell that my growth will be X number, then there will be pressure on my team to go for sanction and disbursement.
Sure.
That I will never do.
Sure.
And we always focus on fundamentals. And since the demand size is pretty high, as long as we ensure discipline and fundamentals and quality corporate governance, whatever numbers you are expecting or the investors are expecting, probably will be definitely sustaining that.
Got it, sir. And just with regard to what are the levers for growth, talk to us about those. Where are you disbursing, just for viewer context, where are you disbursing your loans? How much of it is to private? How much of it is to PSU, stroke, government, state, central, whatever?
See, we have around 63,000 crore loan book now, out of which 26% in private and 24% in government. And if you see function-wise, we have around solar 27% and wind 17%, hydro 12%, hybrid 3%. Combination of all these, if you see, it will be 58%, which we call vanilla RE or traditional RE. Then rest, if you take out that government loan of 24%, remaining around 18% is a new and emerging one. See, as our ministry's name is MNRE, new and renewable. So we, being the extended arm of MNRE, sole arm of MNRE in finance space, our role is also that we have to come forward and see that the new and emerging sector is becoming bankable. And we face the challenges and we play a very critical role in that, making the sector from unbankable to bankable. So that is what we have done in the past also. And despite doing all these things, historically, if you see, company has so far, from the beginning to till date, sanction 1,99,700 crore and finance more than 1,31,000 crore. And our cumulative write-off till date is hardly 202 crore.
Understood. And so, last off on the growth side of things, I want to try and understand. One is that you're sanctioning loans at a fast pace, right? How quickly is the disbursement happening and how quickly is the capex actually happening? If you can talk to us about that, just to understand the income journey better.
See, normally in this vanilla RE, that is wind, solar, hydro, there is not much asymmetry of information in the industry. Since we are there since 37 years, our team is quite expert in doing that. Normally, we have a 3x3 policy kind of thing. If it is a takeover loan, 3 weeks. If it is a fresh loan, once we have all the document and information in place, then 6 weeks. And if it is a completely greenfield and fresh borrower, new borrower and challenging one, 3 months. That is on a very higher side, I'm saying. And though that is a normal practice we do, but we do not mandate to our officer that no, you have to do by this time or that time, unless the team is confident that qualitative due diligence is done. Till such time, we do not proceed. Since we have the mastery in this field, so in the vanilla area, speed is not a problem. But in new and emerging, at times it takes even more than 6 months because the new sector, new challenges, and if the borrower is new, we have to do all kind of due diligence, risk management, and risk matrix, touching all points, so that it is not important to sanction or disburse. We ensure the project becomes successful. Suppose when account become NPA, normally people say it is a government company, what happens? It is not like that. If the project become NPA, even the developer first suffers. So we have to work in such a manner that it's a win-win situation. So we have to handle them, and we do periodical quarterly meetings like post my result. Now all these media agencies are asking and trying to know post listing what and how we are doing and how we are going to do. But our strength is that we are calling post-quarterly results. Our borrower meets and we take input from them. What is the challenges in the sector they are facing? What are the challenges with respect to any state or project? And we take the input from them and we share with our team and deliver it. Then we try to come out with a workable solution, what best we can do in the current situation, which is internal to IREDA, that we realign which is external to IREDA, but with the ministry, we share with the ministry, which is completely external to us. Maybe for pertaining to any state or any pertaining to any project, we try to share with the respective state agencies how to sort out those.
Right. Mr. Das, so, considering all of this, I want to understand from a medium-term perspective, how will the cost of funds go up by how much, first thing, and how much of a margin contraction are you expecting, if you can quantify that for us?
See, quantification will not be that easy. First, in the last quarter when your team interacted, one agency had not given us triple stable, that is CARE, they have given us now. And in April, we became Navratna company. So after becoming Navratna company and getting triple stable from CARE, so whatever agencies we have gone for rating, that is ICRA, CRISIL, sorry, not CRISIL, ICRA, India Rating and CARE and other two agencies. Now all the agencies have given AAA stable. What was happening when our team used to raise bonds, go to the market bonds or any kind of loan? So they used to refer one agency has given you to AA plus. So they are used to lose the opportunity to have a lower rate. So now that stage is over. So we are confident that our borrowing will be more competitive. And in already, I think 2 to 3 weeks back, we had gone to market and our borrowing was quite cheaper, 7.42. We could borrow for 10 years. And against which was going on in the market, even 5 to 7 paisa lesser than that we had taken. And we are confident in the time to come. The way we are progressing and the way best quality corporate governance we are exhibiting and discipline we have maintained, we are confident to reduce our borrowing cost, and we will also look into overseas market, because so far we have not gone, and the ratio of forex and domestic composition, if you see, our overseas composition has drastically gone down to 16%. 4 years back it was just reverse, 57% was forex and 43% was domestic, but now it has gone to 86% domestic and 16 forex. And we need to look into overseas green funds, and those who are keen to invest in pure green companies. Post IPO, we are widely known in globally also, apart from nationally. So we are confident we will bring down our borrowing cost, and we'll try to ensure passing on fair amount of that benefit to the developers, so that we come to a win-win situation where our borrowers get benefited as well as our investors get benefited.
Understood. So, sir, are you comfortable with a margin of 3.2% plus? Is that something that you would be comfortable with as Managing Director, IREDA?
We have already have 3.29 now.
Yes.
So we'll make all out effort to sustain that and further improvise. And we are quite confident in that.
Understood. And this is despite your leverage going up. So your leverage is currently at around, you've got around 50,000 odd crore of debt on a book size, on an AUM size of around 63,000 crore. Your capital adequacy is roughly 20%. So on this book size, or even as your leverage creeps up and as your efficiency goes up, that 3.2% odd will get maintained in terms of margins.
3.225 or between 3.5 will be our objective. But as I said, it is not only to have a lower rate or make profit. We have to pass on to the sector so that the sector becomes bankable and 500 gigawatt also achieved. And we have a qualitative asset in place also.
Mr. Das, credit costs are currently low for you. When do you expect them to normalize going forward?
See, never ever we focus on any numbers. Last 4 years, I have been telling, I'm here in this company since 4 years. From the day one, I have told, don't focus on numbers, because object is 500 gigawatt and demand size is pretty huge. And we have expertise in this industry. As long as we maintain discipline, numbers are going to follow. We can improvise all numbers, whatever you are seeing today.
Understood, sir. But sir, your credit costs over the last year or so, they've been on the lower side, largely because asset quality across at a system level is good. As asset quality starts to normalize, what will your ECL or your credit loss be like? Just wanted an understanding so that we can try and help the viewer to try and understand as to how do you build in that number, or broadly, how do you look at credit costs?
First of all, the tricks in renewable energy financing is if you maintain discipline, your asset quality is guaranteed.
Sure.
If you are having a solar wind hydro project and having a PPA in place, so only thing you have to ensure your during asset interest during construction is minimized. That you can happen when you are having a borrower lenders fair amount of information sharing with clarity, so that speed in financing to the project happens with discipline, so that IDC is reduced. Second, once it is commissioned, asset risk matrix is completely changed, then the interest should be changed accordingly. And we have a dynamic interest mechanism in place, which captures under construction, just completed construction, the COD and post COD. So 3-4 varieties, and those systematically captured, so that interest is automatically risk which is risk premium loaded initially, it is offloaded. So what you will see, particularly in vanilla RE, any lender or any project developer, if they do the project as well as project financing with discipline, asset quality is going to be guaranteed, sustained. That is what we have proven in last 4 years. We are not allowing new NPA to come. We are addressing the old NPA to be addressed. See, despite that, any project financing, there should be some amount of risk. But how best you capture those early warning signals? As I said, every quarter we do our borrower's interaction.
Right.
So we always connect to the borrower from the beginning of the problem. That is what probably generally is missing in other lenders.
Sure.
And that is our USP.
Sure. So sir, growth 25 odd percent, margins likely will sustain, in fact, above 3.2%. Therefore, and credit cost should remain soft is what you are suggesting. Therefore, profit after tax growth to be 25% plus and ROAs to be more than 2%. Is that how one should look at IREDA for a sustainable period of time?
See, I do not have any doubt on these numbers, what you said, because we have been exhibiting the same. And if continuously for 4 years we are improvising, so there is fair amount of confidence, level of confidence on us by you and the investor for sustaining those numbers and further improvising on that.
Sure. Thank you so much, Mr. Das, for speaking with us very candidly and for taking out time. It's been a long conversation. Thank you so much for this.
Thank you very much.